President Biden banned Russian oil imports earlier this month, and now consumers paying the price at the pump. For more on this discussion, we're joined by Chief Executive Officer for the Port of Corpus Christi, Sean Strawbridge. And Sean, in addition, we also have our own Yahoo Finance's own Danny Romero for the conversation. And so we do know that the number of exporters in U.S. Texas crude oil in the nation, that comes through the Port of Corpus Christi here, Sean. So the timing-wise from the issuance of the ban to the action at the ports that you manage, how quickly were you able to shift operations in accordance with the move from President Biden?
Well, Brad, the Port of Corpus Christi is the largest export gateway for U.S. produced crude oil, actually U.S. produced energy. We're number one in crude oil exports with about 60% market share. We're number two in liquefied natural gas, and we're number three in refined products. So that makes us the largest single gateway for American energy exports to our allies and our partners. Now, we certainly also see Russian imports. We've seen Russian imports, and with this ban on Russian imports of crude oil and natural gas, which will go into effect next month, they haven't actually taken effect yet. We anticipate about 4 more cargoes arriving between now and when the ban will actually take effect. What that certainly means is that those American companies that are buying that crude oil have to find alternative sources of crude oil. And at a time when global demand for energy continues to rise, when you take large producers of energy off the table, like Russia and Venezuela, and certainly as we've seen with Iran for many years, it just puts more stress on the overall supply. So we certainly can expect to see higher fuel prices in the near term until the Ukrainian crisis is resolved.
Sean, it's Danny here. Are we at capacity in terms of how much liquefied natural gas we can export?
Yeah, Danny, that's a great question. So when you look at natural gas reserves, we've got abundant proven reserves, over 100 years by all estimates of proven natural gas reserves in the United States. The problem is actually twofold. One is getting more permits, regulatory permitting by the federal government for those producers to produce more natural gas, and then getting that natural gas to the coast where it can be liquefied. And that's really where one of the challenges lies right now is liquefaction capacity has no room for growth until we build more facilities. And those facilities are extremely capital intensive. They take a long time to be built. Our largest LNG customer is Cheniere. They are currently at max capacity in Corpus Christi with about 15.5 million tons a year of production. They just announced last week that they will be expanding their facility, adding another 11 million tons. But that expansion will not actually yield actual results, actual cargoes to be loaded on vessels until likely closer to 2025.
And Sean, what do you mean by liquefaction capacity? What is that? Can you explain that?
So natural gas is, of course, in a gaseous form, but in order to transport it, you have to liquefy it, cool it, supercool it to minus 240 degrees Fahrenheit to create a liquid form, which then creates an increased density so you can actually ship more natural gas molecules in a liquid form. And then once it reaches destination, it goes through what's called a regasification process to then be used in the consumer demand markets. That liquefaction process and those facilities, we have not seen significant new capacity being built. A lot of that is because of federal regulations. FERC is the primary regulator that issues the permits for those facilities, and FERC has to fast track some of those permits in order for us to see more liquefaction capacity, be able to take that abundant natural gas that we have from the production fields, liquefy it, put it into vessels, and then ship it to our allies and our partners who need it the most.
Yeah, and one last thing, Sean, is can you talk about the quality of oil affecting both what we're exporting and importing into our country right now? Can you talk a little bit about that?
Yeah, Danny, that's a great question. So not all crude oil is created equal. There are different specifications of crude oil based on what is going to be refined and the refining process that's being used. So in the United States, usually most of the refineries on the West Coast or in the Northeast, they're tooled for a lighter barrel. They can use Bakken barrels. They certainly can use West Texas barrels, and they're using foreign sources of barrels. In fact, California's imports all of its crude. It does not use any production outside of its own California production. So it imports crude primarily from OPEC countries. But here in the Gulf, a lot of the refineries are tooled for what's called a heavier barrel. And those heavier barrels are usually sold at a discount to the index rates, as we know, WTI and Brent. And so they're a little cheaper feedstock, which creates a little more margin for those refineries. The challenge is getting those heavier barrels, and Russia certainly represents a heavier barrel, as does Canada, which is really the Keystone Pipeline was really earmarked to those Gulf refiners using Canadian crude that they could then refine and have a bigger refining margin. But because we've got an abundance of crude oil in the United States, the Permian Basin alone producing more than any other OPEC nation now, with the exception of Saudi Arabia, we are seeing a retooling of a lot of these Gulf refineries. But those retoolings are very capital intensive and they take a tremendous amount of time. So in the interim, and with some of these burgeoning regulations that we're certainly seeing as part of the current administration's climate goals, we think that we're going to see higher fuel prices for the near term.
What would be the impact to port revenue as a result of some of the regulations as well?
Well, certainly we are in a very good position to respond to some of the vagaries of the market dynamics, and the fact that we are very beneficially located near two of the largest energy producing fields in the United States, the Eagle Ford and the Permian. We're the natural tributary for a lot of that production. United States is the largest energy producer now on the planet, and Texas is the largest energy producer in the United States. So as you see, some of those, what we call those tight oil producers, those shale producers, fill the void that's being left by certainly the sanctions on Russia and certainly the market growth as we've seen continued demand as we've all come out of our COVID cocoon. We think that the shale producers are positioned well to be able to fill a lot of that void, but they're going to need the support of this administration and certainly the federal regulators. And we're seeing some of that already. I saw where Secretary Holmes just yesterday really did come out and encourage American producers who are producing safer and cleaner than any other country on the planet. American energy is produced cleaner and safer. She's encouraging those producers to produce more, but not lose sight of the climate goals that everybody has certainly committed to. Those are going to take longer term innovations and investment in research and development, but we've got immediate needs globally for more energy.
Sean Strawbridge, who is the Chief Executive Officer of the Port of Corpus Christi. We appreciate the time here this afternoon, as well as Yahoo Finance's own Danny Romero for this conversation. A lot of great context and insights here. Appreciate it.